You were listening to chartingwealth.com for Wednesday, the 8th of February, 2017. How do you like our new charts? It is a new day at Charting Wealth. We have designed a new chart, very similar to the old chart. We just have everything in one place for you. It'll take a little bit of getting used to, but you will get used to it. We have everything here that you've seen in the past. We have the price history as shown by the candlesticks. We have the Bollinger Bands as shown by the dashed blue lines. We have the exponential moving average. What we've done is we basically just have a 3-period, so it tracks along with our candles and sort of holds it all together. Without it, they're just sort of all dangling there. I've been asked before, what's the purpose of the exponential moving averages that track the candlesticks? And it's really just to hold the patterns together. And then we have the price percent oscillator in a dark purple line with the red signal line. Then we have the derivative oscillator in the background, pink up, red and yellow down. So we've got everything tracking there on the charts for you. Let's jump right in. This is what's going on in the markets. S&P 500 and the Qs, the NASDAQ 100, up for the day, along with bonds up, gold barely down 0.20%. And when I say the S&P 500, our first chart is up, it really is just broke pretty much even. So what do we see going on? Well, we have an uptrend on the weekly chart. However, our 2-day chart, even though I've gone ahead and put a trend line in, we're still crossed over going down on the PPO. That happened all the way back on the 30th of January. So we're still down as far as the PPO goes. That is the price percent oscillator. We also are down on the derivative oscillator. So we don't have a trade in the S&P 500 at this point. We just don't, even though things have been tracking up. We can look all the way back to the 27th of January and see that actually things peaked out on that date, and it still hasn't caught up with the high that it reached back then. We had a gold crossover, of course, what we call a weekly vertical crossover back on the 28th, sometime around the 28th of November. And of course, things tracked up for a while and then slid sideways, up a little sideways, up a little sideways. So that doesn't make for a very cogent trading technique if you're trying to use our standard procedure, which is have the weekly and the 2-day moving in the same direction, wait for a pullback on the 2-hour, sometimes 4-hour, typically nowadays the 2-hour chart, then jump in when it moves back in the same direction as our 2 big charts. Had a student this morning say that in literally like 10 words. It was very succinct, and I told him that in an email. And again, you want to email us, cw@chartingwealth.com. You can find that address at our website where you can sign up for our daily email now, and that includes all of these broadcasts. Okay, let's move from the S&P 500 to the Qs. The Qs was up 0.37%. Now, of course, we had a vertical crossover occur on the weekly chart there back on the 6th of January. We had a jumping in point at 10:30 a.m. on the 9th of January. The 9th of January. Sorry, getting January and February confused. And we have had a beautiful run up since then. If you all have not already listened to our profit summary that we put together, I did that last night late. It is up on the YouTube channel. In fact, I'm going to put a link into these remarks on the YouTube and on the email that goes out to everyone so that you can link to that video. We're very proud of the 5.15% increase in the 2 weekly crossovers that we saw there, that we jumped into. That was the top that it hit during the month. I think for the Qs it was 3.15%, and for gold it was 2%. And that, again, for those of you who understand trading options. If you would have bought out of the money call options for say February and you saw that kind of price acceleration, I mean this was 3.15% on the Qs and this was 2% on gold. You can only imagine what out of the money options either for January or for February, well, for February, would have done for you. It would have been incredible. But just 5.15% on those two trades is incredible. People don't get 5.15% a year on investments for all 12 months. So again, that's why it's important for you to train with us. We're not a stock calling service, not giving you investment advice. We do want you to practice with us though and get good. And when you get good and competent and you put all your knowledge together and feel comfortable, you too can jump into your own trades, but then and only then, and you make up your own mind. We're not a stock calling service. We don't get paid for that. So what do you see going on in the Qs? For those of you who did not jump in all the way back on the 9th of January, we did have a pullback and then a jumping in point. If we go to our 2-hour chart, we can actually see the latest version of that. That occurred actually on the, oh gosh, here we go. That occurred on, let's look at these times. Okay, at 4 p.m., right there at the end of the day on Thursday, that's where that crossover occurred. So you could have jumped in even on Wednesday, rather. You could have jumped in Thursday morning after idiot hour, somewhere around the mark of $125 after the crossover occurred on the 2-hour chart after its pullback. And of course, where did the market hit a high over the last few days? Well, it hit a high during the course of the day at noon on Tuesday of 126.55. So if you had gotten somewhere in the launching point of 125.18 or so, about $1.50. That's not bad over 1, 2, 3, 4 days, is it? Not bad at all. And again, we want you to practice this. We want you to realize what the rules are. We want you to follow them. Get good at doing this. It's worth your time, 10 minutes a day, every day. Fill out that daily market worksheet. Other good news, we updated the daily market worksheet as requested by you to include the PPO. We dropped the MACD. They're very similar. The PPO actually allows price percent instead of an absolute, as the MACD does, solves a number of problems for us. We got that suggestion from one of our students, and again, we love learning from you, listening to you. When you have good suggestions, we will adopt them, and we have. So we have a new daily market worksheet. It is also going to be attached to the emails that go out, the link to the new daily market worksheet that reflects the 2-hour instead of the 4-hour chart, and also reflects the PPO instead of the MACD. Please go there, get that also. Okay, there's where we are on the Qs. Now let's go to TLT. We jumped into a trade actually on the first day of the week after we had the crossover at the end of last week. We jumped in at 10:30. We've already had you writing us about it. And of course, what have we seen? Wonderful appreciation. There was also a crossover going up on the 6th at 10 in the morning, about the same time. And again, you have to wait till 10:30 to jump in. But the jumping in point was somewhere around 119 or so. And of course, what have we seen? Well, we saw TLT move up to 120.60. And in fact, the high for the day, 121.01. So again, nice appreciation over the course of just the last day or so, day and a half. So again, it's nice when the charts work for you. Isn't it beautiful, my friends? Okay, that's where we are on TLT. The good news was we couldn't make any trades on TLT until the weekly, and the 2-day were moving in the same direction, and the weekly moved over going up. So let's continue to follow these things. Just great to watch all this happening, coming together in both January and February. Remember, we're in the fat time of the year. This is the fall-winter trading zone. Remember how ugly it gets in the summertime? Well, it's not ugly now. Okay, let's talk about gold. What's gold up to? Well, gold is up on, of course, the weekly and the 2-day. We jumped into a wonderful gold trade back at the end of the month on the 30th. Of course, between the 30th and the 31st, we had that 2% inflationary jump in gold. I don't know, the price inflated. It was fabulous. 2% win over that short a time period. Well, we also had an entry point for you on the 30th at 12 noon. That's where the entry point was on a crossover on the 2-hour chart. So hopefully some of you got in there. You would have gotten in somewhere around, 114? And where did gold hit its high over the course of this past day or two? About 117.74. Let's see, 117.74. Is that higher than 113? Yeah, it is. Nice, isn't it, my friends? How complicated is this? Not too complicated. Please stay with us. Practice. We are so proud of what we are seeing. When it works, my friends, it works. It works well. Remember, our rules are you are a trend follower. You are not guessing what the market's going to do. You let the market do what the market's going to do, and you follow the trend. That's it for this evening. Hope you like the new chart. Let us hear what you think about it. Please make sure to go listen to our January price earnings, the earnings report that we put out. We're going to be publishing those every month in full disclosure about what we're doing right and hopefully what we're not doing wrong. We want to continue to make things move in a positive direction. Thank you so much. If you have questions, problems, concerns, go to the website. Let us hear from you. We try to answer your emails in a timely manner, and we just appreciate you. You appreciate us. Ask you to do 2 things for us. Go to iTunes, subscribe to our podcast, give us a 5-star rating. Also, subscribe to us at YouTube. You can say nice things about us there. Also, please follow us on Facebook, Twitter, Instagram, you name it, we are there. We're here to try to help you. God bless. Take care from chartingwealth.com.